Hey, Adam Rundle here, and today I want to talk to you about the perfect P&L, which is essentially just the starting point of identifying, implementing, and utilizing your ideal financial model in your business. And so when I say financial model, people get really stressed and they think, man, that's so complicated. I don't know what a financial model is. Do I need some education or experience to understand how to implement a financial model? And the truth is, it's absolutely not. Financial models are actually really simple. And all they are is a guideline or a framework around which you're going to build the financial operations of your business. So before I continue, I just want to frame kind of who this is. And you can see I've already detailed what this perfect P&L is. But before I dive into the real detail there, I just want to frame kind of who this is for. So one, who's for and when is the best time to use it. So this is for service-based entrepreneurs. Entrepreneurs who are either in the done for you or done with you type service offering, maybe a coach or consultant offering one-on-one or group coaching or consulting, or you're offering a course. And if you fall outside of that realm, so if you're in real estate or e-commerce or retail, then this model isn't built for your business. Secondly, when is this applicable? When do I need to implement a financial model in my business? And so there are two major phases in a business, especially in businesses that I've just referred to, done for you, done with you, coaches or consultants, or you're offering a course. Phase one is what we call market validation. And so in phase one, what we're doing is we identifying what our product or service is. We are identifying who our ideal market is, so who that avatar is, that ideal client. We are formulating an offer that we can then push out to that ideal client, whether it is through paid advertising or organic. We're making sure our messaging and copywriting is all perfect. And then we're getting our ideal clients to schedule a call with us so that we can then sell them our service or our product or our course. And so that is phase one. That is market validation. And then phase two is scaling or growth. So then going, okay, how do I now scale and grow my business in order to maximize revenue on the other end, so I can sell more and do more and offer more to my ideal audience. And there we're looking at growing your team, whether it's contractors or employees, systemizing, creating operations that have the ability to be scaled. So that's phase one and phase two. Identifying and implementing, and then that's utilizing your financial model fits in exactly between phase one and phase two. Okay, so once you've identified that we can generate a revenue, we have people lined up ready to pay you for your services or your course, whatever it may be, you need to identify what is the financial model that you are going to operate by. And the reason why this is so important is because that financial model is the guideline, it's the framework, it's the roadmap to scaling your business and growing your business to maximize revenue, maximize profits, and everything else that we want to do. So it's hugely important that you have a financial model in place. If you don't have this in place, it's like having a sieve between the two. So there's no guarantee what you're going to catch on the other end. There's no guarantee you're going to be profitable. There's no guarantee that you're actually going to have the means to scale and grow your business. Let's dive into it. So the perfect P&L, a P&L is simply a profit and loss statement. That's all it is. So it's a statement showing you all the income into your business, all the inflow of money, as well as all the expenses, all the outflow of money, factoring in some taxes, and then ultimately what is your profits at the end of the day. And the real value here is we're actually using a percentage model. The variable is income. Okay, so we can change income. So let's say you're at $50,000 a month revenue. We put $50,000 a month at the top here, and then we'll split out what we want our P&L to look like in a percentage model, and I'll explain that to you further. And the nice part is we can now change it. We can say, hey, I want to go from 50 to 75, or I want to go from 50 to 100. And you put 100 in at income, and then you can see a very clear roadmap of what you want this to look. So the P&L is broken down into these categories. So income obviously at the top, and there's 5 main expense categories. And so the first two are the two biggest, and that is advertising and labor. Okay, advertising is anything you're paying in order to generate leads and thus clients. Labor is all your labor costs, including your own salary, contractors, employees. And then the next 3 are kind of overhead costs. So fixed overheads, things that stay relatively fixed over a 12-month period. Variable overheads, those are things that are changing constantly and are normally directly related to some other metric in your business, either more clients or a bigger team. And then owners, which is a great category to have so that we can identify different, the expenses that are predominantly spent on the owner but are still business expenses. And then we have pre-tax profits. So this is now the profits we are generating before we are paying taxes. Then a portion of those profits we will then have to pay taxes on, okay? And then we'll have profits at the end of the day, which is net profits after taxes, which is ultimately what our bank account should be growing by. So how do we break this up? So the first thing we do is we lump advertising and labor together, and we attach 55% of revenue to that category. And the reason why we attach these together is because these are the two biggest levers in your business. If you want to grow and scale your business, this is where you're going to spend the most amount of money. So we lump those two together, and there's another video I have where I go into detail about how to break up that 55% between these two, and there is a bit of a nuance there between what kind of business you're running. Then we lump the next three together. We want the total of the three of them to equal no more than 15% of our total income, okay? And so if we calculate that correctly, we then have 30% pre-tax profits, which is super healthy. It's not that easy to obtain. If it was, we would all be millionaires, so we wouldn't have to watch things like this, but we need to aim for a 30% pre-tax profit margin. And then based on that, we're going to pay taxes. So I'm just going to use 33% of that 30%, or whatever number this is, 33%, a rough tax number. I'm using that for the ease of math here, okay, which would result in 10% of the total, or you're going to keep aside or pay in taxes. And what the net result is, your net profits of 20% of revenue is what's at the bottom. And I've written here free cash flow, and this is the most important part. The reason why you want this to be 30 and so that this can be 20 is because this is the biggest driver enabling you to grow. Because this is, and if you're using the cash model, which you should be using, and I'm not factoring in payment terms and payment plans, those are added nuances to a business, which you will go into more detail on as you build out this model. But let's assume everything's cash for now. That you are adding 20% of the total revenue that you're bringing in on a monthly basis, you are adding to your bank account. Your bank account is growing by that 20%, which is huge. And that is the springboard that you're going to grow in your business every single month, adding that 20%, which is going to allow you to then actually scale and grow your business from, let's say it was 50 in that previous example, to 100. And I go into more detail on that in another video. It's called the Master Growth Plan, where I explain why having this is so key to allowing yourself to springboard to that next level in your business. And if you don't have this, what it can do, and then you're going to run into all those issues of cash flow. So there it is. It's that simple. The perfect P&L, which is the starting point of your financial model, broken out, a profit and loss statement. And so we've identified, there it is. Okay, now we want to implement. So the first part is figure out, so I'm going to implement it quickly for you right now. The first part is figure out what is your average income on a monthly basis. Whatever that is, put it in here. Okay, so let's say it's 50. You put 50 in there and you work out what these percentages are based on that 50. Then you go and you measure your actual expenses in these categories and measure those to what this perfect P&L is showing you. And that first step is, now this is part of utilization, so now we've implemented it. So when you're utilizing it, the first step is to try and get your business in line with the perfect P&L before you jump into phase 2, which is scaling and growing and moving from 50 to 100. And so now the utilization is the decisions you're going to make. And it's a very, very clear roadmap and guideline there for you to do that, because you will know, hey, if I'm spending more than this 55, that's an area that I need to look at. If I'm spending more or less than this 15, that's an area I need to look at. Making sure that you understand that we want to get to this 20% at the end of the day so that we can scale at the rate we want to scale it. So that's your perfect P&L and the starting point of your financial model. As I expressed, there are a couple of other videos I have explaining more in detail about advertising and labor, as well as your perfect growth plan about how to get from 50 to 100 without breaking your business. So thanks so much for watching this. I really, really do appreciate it. If you liked it, please share it with people that you know that could use it. And even if you liked it or didn't like it, some comments would be great. Any dialogue, any conversation around this topic is hugely welcomed. So thanks again. Cheers.